Hey, what's up guys? John here. Some very big things are happening in the housing market and the economy that everyone needs to pay very close attention to. I believe what they are trying to do right now is to fight off a severe real estate collapse. And they're doing some pretty crazy things, and I personally think that there's no way in which they will be able to fend this off forever. I think only this is going to just make things much worse. And so if your intention is to buy real estate, to invest in real estate, to grow and scale, maybe your real estate investment portfolio, the time to do it is not right now. The time to do it is very soon. They're now even bringing out 3% down payment programs for $1 million purchase. So buying $1 million home and putting down $30,000. Think about what that means. If you're gonna buy $1 million home, my opinion, you should have 20% down. And the reason for that is the monthly mortgage associated with that type of purchase, with this interest rate environment, it is so expensive. In this video, I'm going to walk you through what's going on in the housing market, what's going on in real estate, and what's happening with these big real estate investment firms that are limiting withdrawals. So they're raising billions and billions of dollars simply saying, hey, you can't take your money out. This isn't just happening in real estate and crypto. It's happening in a lot of different industries. We're going to get into it in this video. Please hit the like button, YouTube's going to share this content to educate more people about what's going on. Home buyers could soon get a $1 million mortgage with 3% down. To qualify for a $1 million mortgage, Americans typically have to make a down payment at least 20% of the home's price. Starting next year, some buyers could put as little as 3% down. The cap for home loans backed by Fannie and Freddie rises to $1,089,000, so basically $1.1 million. Next year, a few expensive markets, including LA and New York, up from $970,800. The Federal Housing Finance Agency, or FHFA, said Tuesday the higher limit means borrowers can qualify for bigger loans without needing to take out jumbo mortgages. So, Business Insider came out today saying a controversial fix for America's housing market, more foreclosures. They're saying what we need, more foreclosure is actually going to be a really good thing. It's going to be a great thing for the economy. But what I personally believe is they want to help more people get into these properties, only for the revenue that they can generate through increased property taxes. When they can get people into a property, it doesn't really matter if they are going to foreclose on them down the road. For the short term, they're going to be able to squeeze more and more tax revenue out of them. And ultimately, during this period, we're going to be able to, kind of hide this disaster that we're in, this economy. They're going to hide the reality of it. They go on to say right here that some experts argue that the years since the crash, the GSE, the government services, government-sponsored enterprises, lenders and regulators overcorrected, shutting loads of potentially reliable buyers out of the housing market. Lori Goodman, the founder of Housing Finance Policy Center at the Urban Institute, a nonpartisan think tank, said that there's room today to open the credit box and relax lending standards without pushing the housing market into a crisis. More foreclosures might come as a result, she said, but that would be a worthwhile trade-off if it gave more people the opportunity to build wealth through home ownership. Well, if you're buying $1 million property and you're putting $30,000 down, 3% down, your cost of sale to leave that property will be at least 5% for realtor fees, plus transfer taxes, closing costs, escrow fees. You're probably looking at about 8 to 9% just to sell that property and get out from underneath of it. Meaning that everyone that buys $1 million property, if they're buying it at today's market value and they want to sell it at that market value, they'd have to write a check out of their pocket for $50,000 and they'd have to take a complete loss in the $30,000. So everyone's essentially entering these deals with negative equity, and this is supposed to be a good thing. This is a disaster waiting to happen. And look at how expensive this would be. Mortgage rates today, average credit borrower, average credit score in America is a 698. It's 8.136%. This is, if you have above average, it's 7.095%. But if you have average credit score, it's 8.136%. So $1 million property, 30 grand down, which is 3%. You're looking at an $8,840 a month mortgage payment. $8,840. So for you to buy that property, it's almost like treating it as a rental where they require first month, last month security. That's essentially what's happening right now with these $1 million homes that they're trying to move us into. Meanwhile, when we're looking at what's happening, we're seeing Blackstone and all these different companies limiting withdrawals. I personally believe that they're doing this because they know that an economic storm is coming. And so the last thing that I would advise anyone to do, I'm not giving financial advice, but one thing I would advise anyone to do is to run out there and make a hasty decision. You should really pay attention to the writing on the wall. The writing on the wall is signaling that they are simply trying to paint a picture that really isn't true in this housing market. What's really happening in this housing market is we're entering a real disaster. And what I'm betting on is that interest rates are likely going to be rising in the short term at least. December, we're likely going to see a 50 or 75 basis point hike. We're going to continue to see that. I think that as these interest rates continue to rise, we're going to see more and more people start to default. And that's exactly when you want to have credit, you want to have cash, you want to have a game plan and a strategy. And my advice probably wouldn't be to invest in one of these investment funds. It would probably be to take control of your own investment, invest in things that you know, like, and understand, have a true strategy, and really take full ownership of your decisions. Because when you trust a third party to, store all of your money in some real estate fund, you don't know what's going to happen in the market. No one knows. And so because of that, it makes more sense for you to take on that obligation to yourself and invest in really great assets and weather the storm on your own merit without taking on any outside risk. If you need help fixing your credit, we'd love to help you at greatcreditfast.com. You can watch this video here and I walk you through exactly what's going on. And you can also schedule a strategy session. We don't have any calls available today. We're all booked up, but I think we have some calls available tomorrow if that's something that you're interested in fixing your credit. But right now, a lot of the attention, especially early 2022, was allocated towards the crypto market. Everyone was thinking crypto is going to crash, and we're looking at it. People, I think, forget about what's actually happened so far in crypto, and this is all correlated. Luna collapsed, Celsius, Voyager, 3 Arrows Capital, BlockFi, bankruptcy, FTX, Coinbase, talking about limited withdrawals a while back. We have all these different things that are occurring in the crypto market. I think everything as a whole is going to get restructured in 2023. And that's exactly when you want to have money, a plan, a strategy, credit opportunities. You want to be able to go out there and invest. But it's unbelievable to me, watch a company like Blackstone limit withdrawals on a $125 billion fund as investors rush to exit. Why are investors rushing to exit if everything is great? It's because they know that there's way more risk in front of us than there was in the past. And they want to have access to that dry powder. They want to be able to run out there and make their own investments. And that's what I think a lot of people should be looking at. Blackstone has limited withdrawals from its $125 billion real estate investment fund following a surge in redemption requests as investors clamor to get their hands on cash, concerns growing about the long-term health of the commercial property market. The private equity group approved only 43% of redemption requests in the Blackstone Real Estate Income Trust Fund in November, according to a notice it sent to investors on Thursday. Shares in Blackstone fell as much as 8%. And then it's not just Blackstone. Starwood REIT limits investors' withdrawals as well. Starwood has become the second non-traded real estate investment trust to limit investor withdrawals after a surge in November requests exceeding monthly limits. In a letter to its investors that forwarded to Barron's, the $15 billion real estate income trust, as well as the S-REIT, said it fulfilled 63% of investor redemption requests in November after the repurchase request exceeded the 2% limit, reaching 3.2% of net assets. And then we have Opendoor, the CEO of Opendoor, stepping down. So what we're seeing here is we're seeing massive change. We're seeing massive change. And during opportunities of massive change, you want to be well positioned for it, because they're setting everything up in the real estate market for what I believe is going to be a crash far greater than we've ever seen, far greater than 2008. We have household debt at roughly $16.5 trillion. $16.5 trillion. Most of that debt is sitting at 0% interest, very low interest rates. And as they continue to increase the interest rates, what's ultimately going to happen? The cost to service that debt is going to be increasing as well. You have over half of employers in America scheduling layoffs. We have some really big changes. You got these big real estate investment companies with, billions and billions of dollars limiting withdrawals. I mean, Blackstone's sitting on nearly $1 trillion in assets under management. Right? I think of roughly $900 billion. Early in 2021, it was like $880 billion. They've only grown since then. So we are seeing huge change. My advice, make sure that when you invest your money, you are investing it in things that you have control over. That's most important. You want to invest in things that you have full control over. You want to invest in things that you understand and know. And if you don't really have a game plan or a strategy, this is the best time. Like in these uncertain times, this is the best time to really study the market, to pay attention, and just to read and learn and start to explore things. Because when you have the understanding, you're going to be able to go out there and make decisions based on your own knowledge rather than relying on somebody else to make a smart, well-informed decision. I'll hear all the time saying, people would say, oh, I have a good real estate agent. They're going to find me a great deal. The real estate agent's job is to get you into a property and to sell you a property. When you have an investment manager that's trying to sell you a product, their job is to sell you. You should have the understanding and the knowledge so that you can know where you should be putting your money based on your own interest. What are your thoughts about this entire situation? Drop your comments below. If you need help fixing your credit, we would love to help fix your credit, give you a free consultation, go through your report, really make sure that you're well positioned to get cash. I mean, when in times of economic downturn, you want to have access to money. I was reading this book earlier today about Oak Tree Capital. And what they said was in March of 2020, when the world shut down, they deployed more capital inside of 9 weeks than they have in any given year. And they bought so much distressed opportunity, and they've seen an insane multiple of the money in which they invested during those distressed times. And that's when real money is made. Real money is made when everyone else is afraid. That opportunity is going to be coming soon. You need help fixing your credit, we'd love to help you. Subscribe here. Subscribe also to my second channel, LinkedIn, Twitter, Instagram, TikTok up in the banner. Catch you guys in the next video.